Hi, I'm Peter Rose, founder of Longwood Currency Trading. 75 Pip FOREX 5-minute bar. Holy crap, on a 5-minute bar. It was on a major pair. It happened on a Sunday opening at 5 p.m. Eastern Time, right at the open. I mean, that is a spectacular move on a 5-minute bar on a major pair. We're finding more of these types of what you would call volatile action. I mean, you have to look at the mean over time and then determine whether you're talking about maybe a black swan volatility move, or whether you're simply 3 standard deviations out from the mean or whatever. You have to bear this all in mind. Because otherwise you think, oh, well, that was interesting, that won't happen again. Well, we've had three major events like this. We had 2 gap openings. In fact, I just did a video, I don't know, 4 videos before this one, titled 2 gaps on the 1-hour Forex just lost some traders a lot of money. I'll try to leave a link to that in the show notes. But are we going to see that we have a probabilistic expectation of these types of events? We haven't really seen them in a while because I'm talking about them, and everybody is talking about them, gaps and 75 pip 5-minute bars. What's causing this? Well, we've gone dramatically up in the daily volume. All right, so we've gone from, I think, a year and a half or so ago, I kept saying there was a $7.6 trillion a day market. And in a reading I did not long ago, I think it was 4 months ago or something, I found that currently, this is 2026, May of 2026, that the volume had gone to $10 trillion a day from 7.6. When I started looking at the Forex market in 2007, it was $3.4 trillion a day. So from 2007 to 2026, we've gone from 3.4 to $10 trillion a day. That's going to cause a lot of different types of price action. Well, it's not going to cause different price action. It's going to cause larger movements in that price action. It's like you have a motorboat, a 20-foot motorboat, and it goes along the water, and then you've got a 400-foot ocean liner with the cruise line passengers playing pickleball on the 4th deck, and it goes by. It's going to leave waves, but their periodicity and their amplitude is going to be much more pronounced than the smaller boats. So we could say, well, geez, that was an anomaly, but we're having more and more cruise ships now, so the anomalies are becoming regular. As Forex traders, we have to understand what's really causing this, and I get back to this volume, is it's price action. If you have $4 trillion a day of order, those are orders. You're putting orders in. If you have $10 trillion a day, that's more orders. It's a bigger boat. And so you have to expect that you're going to have more and more of these really large events happening. But in the Forex market, it's changing very rapidly because of the increase in the volume. The increase in the volume is an increase in the retail market because 95% of that volume is institutional traders. So we have very little to do with that. We're not the dog in this, so we better figure out what price action order flow means and understand it so that we are sure that the rules that we're building for our trading aren't these stupid golden cross or Fibonacci based. That stuff just doesn't work. If your price action order flow rules and analysis that you do are not based on process as opposed to systematic evaluation, if you don't understand the correct way to evaluate these market conditions, then you're going to get eliminated. I mean, there's no other pleasant way to put it. In my fast track course, I deal with process. So it's just logical for me to look at at what's going on in a more rational standpoint than for some of the folks that I chat with through email who got caught and are incensed by, how could this happen? And blah, blah. I set my stops and the stop didn't get hit and it turned around and it went so far against me. I got margined out because the stop didn't get hit. And then the price turned around and my stop got hit, but that's going the wrong way now. And I don't have enough money now left in my account because I got margined out to take that trade. So it didn't take the trade, so I couldn't make up the loss. It's really troubling to understand that if you are doing swing trading or position trading, you are more prone to get whacked with this stuff than the day traders, which I am, or scalpers, which I do sometimes as well. I want to be in control. I want to be there. I want to have my face in the screen. I call that screen time. I think it's one of the most important things that we could do as Forex traders. When we're looking at doing trading, you have to be really careful about the type of trader that you're looking to be. I know why a lot of folks consider that the position trading is safer because you can go off to work, you don't have to worry about it, you come back at 5 o'clock, check your prices, make adjustments or whatever, and forget about it until the next day at 5 o'clock when you get home. There's a certain peacefulness to that until you get a 75 pip 5-minute move. And then you have to come home and pick up the rubble, if there's any rubble left for you to pick up. We're fortunate in the Forex market that we don't have lock limits like is true in the futures and the commodities markets. But we still have gaps that may not fill, and you may get stuck. And if you're gapped out and it's below margin, it's not going to take long for that broker to whack your account because everybody got whacked out. So they're going to be shoving everybody off to the side. They may say, oh, if you've been in margin over 2 days and then, then we'll send you an email and, you got to square yourself up. They ain't going to do that. In the Swiss financial crisis, I think it was something like 90% or 80% of the retail Forex brokers went bankrupt. And all the money that their clients had was lost. You lost all your money. And in some cases, the brokers were going after the person's assets above the amount of money that they had in their account because that's the contract that you sign. You're more likely in a commodity market like Kansas City wheat or something to lose your house than you would if you're trading Swissy or something or pound dollar. But the black swan is still there. It's still aware. Just as a 75 pip 5-minute bar is possible. If you can conceive of it, it's a problem. That problem also has to have a solution, as I said in one of my recent videos. If you have a problem, you have a solution to it. Now, the solution might not be the elimination of that problem, but you may have ways that you can mitigate it through stops or trails or doing what I do, which is day trading. You're flat at the end of the day. Your face is in the screen for the 2 hours that you're there trading or the hour that you're there. I mean, the fast track course is designed for people who work a job. You trade a couple of hours in the morning or at least an hour, and the fast track course gears you in a process-oriented manner as opposed to golden crosses or fixed structures that you might not be able to get done in 2 hours. But in process-oriented trading, you could get done in an hour or 2 hours. I mean, I do it all the time. And that's what I teach in Fast Track. If you'd like more information on that, send me an email. I'll be happy to chat with you about it. I think what I might be able to help you with is to better understand this price action order flow that you need to get a grip on through the rules that you have. And if you don't have rules, if you have a system like a crossover, your Fibonacci numbers or Bollinger Bands with an RSI, and that's your trigger to go in, those don't work. They just don't work. Bank traders laugh at the Forex traders for using that shit. because they don't use it. They look at that stuff in order to know where the liquidity is going to be for the fools that are putting their stops in the way. And I suspect that this 75 pip move was an unloading of a lot of crap somebody didn't want to buy something that they did want. That's just the way it goes. I haven't actually looked at all of the majors. I'll have to do that when I finish this video. Go in and look at all the major pairs and see if they had a 5-minute bar that was equal to that, or maybe it was just the pair that I'm looking at. It was pound dollar. So this is, like I said, May of 2026. It'd be the, I don't know what today is, 11th or something like that of May. You can go back in your charts and take a look at it. But the key to the video is the solution that I see is don't be a position or a swing trader, because when you get it wrong, it's catastrophic. In day trading, when you get it wrong, it's just another crummy losing trade out of the win-to-loss ratio that you have. And if you have confidence in that and your average win value and some of the other metrics that I stress in teaching in that Forex fast track course, you go, well, it's just, I'll win the next one. I've limited my risk through good risk management principles. And that's the key. I can see how that happened, not because I followed some stupid fucking rule that you don't understand why that happened. Oh, because the short MA crossed the long MA. Really? Well, the conditions of those crossovers change. So if you don't have a rule that's condition-based, you're not going to be successful with that. When you are cognizant of these big moves, you need to be aware that the reason for that move is we're looking at a $10 trillion a day market with 95% of that volume, the institutional trader. That's the guy that you got to figure out in order to figure out the order flow. And it's not the institutional trader that's causing the order flow. It's the client of the institutional trader that's telling them what they need to do, and they're making the order fit into that market however way they can. If you'd like more information about this, I'd be happy to get a conversation going with you. Just send me an email. That's all you have to do. And if you have a specific question, maybe I can solve that and get you on the right path without you needing to talk about taking a course or whatever. My job is to help you, and that's what I'd like to try to do. But I can't do that unless you send me an email. Peter Rose, Longwood Currency Trading. Have a great day, and have a great trading day.